of job creation. We know that there's also an increase for employers who hire young people, 1,500 rand per month for every young person that they hire. So those are some of the measures that were mentioned by the finance minister today. But some political parties wanted him to go further. They want details as to exactly how these jobs are going to be created, and they don't feel that some of these incentives are going to be enough. The economy is too sluggish for these incentives to have the kind of impact to create mass number of jobs. But here's the DA's Dion George, followed by the IFP's Nzamu Buthelezi, sharing their views on Enoch Godongwana's maiden budget speech today.
The elephant in the room, and that's the public sector wage bill. He is unable to do that because he doesn't have the political space to do that, and that is why we're having pressure on debt. That's why he's not able to make the changes to debt that he'd like to see. So the debt spiral will continue. We're going to spend R1 trillion in interest payments over the next 3 years, and that's unsustainably high. We do welcome, of course, the cut in the corporate tax rate that was already factored in. But what he hasn't done is he hasn't looked at how you're going to actually generate growth in our economy. And how you're going to do that is attract capital into our economy. There is no incentive for small business, for example, tax holidays, tax breaks, etc. He should have announced those. He should also have announced measures to get tax out of the way of savings in South Africa. He never did that either. And also on the state-owned enterprises, he was silent on this large state-owned enterprise that's going to look after all the bankrupt ones. We don't know any detail on that. He did speak in the right direction on them, but he certainly wasn't bold enough. So I think it was overly cautious. I think it was an opportunity missed. Given what the President said, it's time to allow business to generate jobs in South Africa. This budget does not facilitate that.
We were hoping that he will actually be very decisive in terms of telling us in the country that there will be no money that will be given to state-owned entities in the future, as much as alluded to that, but we're expecting him to also announce that they are in the process of selling those underperforming entities, and also, if not selling them, bringing in new partners to all of them, because basically all of them are not performing. So that was the bold decision that we expected him to actually tell us, to say no more bailouts, but what do we do with them currently, because we can't keep them like that, because if we do keep them in future, he will come back and say there's more money that's needed and we have to finance them.
Well, so you heard the DA there talking about the fact that they would have wanted to hear more about the contributions to getting more people employed. But I want to bring one other aspect here, Lindsay Dentlinger, is the fact that the previous loan scheme that we had, now you remember during COVID we had this massive intervention to create about, 200 billion rand was the intention, to dish that out in forms of loans. You read those lock-up documents and you heard the speech. That didn't really work, did it?
No, and there's been, the Treasury is conceding that it didn't work out. There's now an announcement of a bounce-back scheme. During a press conference we had before the budget speech, the Treasurer General of Treasury, Dondo Mokgojane, saying that we shouldn't be afraid to acknowledge that it didn't work out, but that Treasury had to constantly be innovative and put things on the table, test it out, try it out. He says we should be reminded that South Africa is still a young democracy and they're still trying to figure out things to try to help as many people as they can. And that is what this bounce-back scheme is all about, to pick up from maybe the failings of that loan credit guarantee scheme.
What's significant about the new scheme, as the finance minister mentioned, is that banking criteria would be loosened. Now remember, the last time we had an issue where the criteria many of these businesses said were too tight for them to get loans. I want to take a listen to what he says around this new bounce-back scheme, and will it be good enough for small businesses to go ahead and get funded by and do what they do best? Let's take a listen.
Firstly, small business loans guarantees of 15 billion rand will be facilitated through the participating banks, development finance and development finance institutions. This will allow access to qualifying non-bank small and medium loan providers. Government will partner with loan providers by underwriting the first 20% of loss for banks and other eligible small and medium loan providers. The eligibility criteria, including the requirement for collateral, has been loosened. This mechanism will be launched and operational in next month, Secondly, by April this year, we will intend to introduce a business equity link loan guarantee support scheme. We intend to bring the total support package through the bounce back scheme to 20 billion rand. The equity support mechanism of this scheme will be facilitated through the DFIs. It will also be available to qualifying non-bank small and medium finance providers. Details of the terms of the equity link guarantee mechanism will be provided soon.
And there you have it there, the Minister speaking about that new bounce back scheme. And I think what's interesting, Lindsay Dentlinger, is the fact that you had a chance to speak to the Minister in the Presidency, Mondli Gungubele. And I mean, he had a lot to say after SONA. Now remember, the State of the Nation address that President Cyril Ramaphosa delivers is expected to get a bit more flesh at this budget. I mean, there was tons of things said about job creation and just expanding the economy. What did the Minister in the Presidency have to say to you?
Well, he believes that this budget delivered this afternoon gives the teeth to the President's speech of 2 weeks ago, that he's saying all the right things about infrastructure development. He believes going far enough to stimulate job creation, especially amongst the youth. And then, of course, we're going to talk about that a bit later, Devan, but also corruption, dealing quite a significant portion of money also going there. And as you know, all that money wasted to the state, lost to the state, that could be used to implement these programs of government. And so Mondli Gungubele saying he believes that the speech this afternoon really put government on the track to fulfill those commitments the President made 2 weeks ago during his State of the Nation address.
And again, you sat in lockup, so you understand the nitty-gritties of it. The budget document is quite huge. You're not going to read it in just 3 hours, I understand that. But it was interesting what he said about one of the big elephants in the room, and that is Eskom. The fact that we understand they are sitting with a 400 billion rand debt. We can't look the other way as government, he says. Some magic has to be done, because it's one of the pillars of the economy. I think that was interesting, though. We didn't see any huge significant chunks being chucked to state-owned enterprises, but there was an admission that Eskom has to be dealt with.
Indeed, and Enoch Godongwana, speaking to the media before his before his delivering of his speech today, again came back to that. You'll remember that phrase he used in November of tough love.
Yep.
And he was saying to us that it doesn't mean that state-owned enterprises will never ever get money again, but they are going to be stricter about who gets money and for what reason, and the criteria has to be there. So we know that only Denel is really, if I can call it, getting new money. Eskom will be getting money through this budget, but that's money that has already been allocated to them, and we understand that they will be allowed to loan against their guarantee this year. But we know they missed that deadline, the December deadline, to unbundle the first part of the company, and so the finance minister also saying that he doesn't care where South Africa gets their electricity from, as long as we get enough electricity to stimulate the economy, to bring investment to South Africa. And so not saying that there will never be money, but certainly saying that is his tough love stance. The fact that we didn't hear any new money being allocated in his budget speech this afternoon to state-owned enterprises. But in terms of Eskom, they're going to have to work from it, and he wants to see Eskom making concessions. He gave examples saying they should start to sell their assets, for example, and they need to prove that they are being more efficient on their own before government's just going to dole out more money again.
I'm wondering how taverns are feeling this afternoon, because consumers and motorists are looking back and saying, well, you know, thankfully we don't have those hikes in income taxes. We've got a good bit of a reprieve on the levies, but the sin taxes on alcohol and tobacco was still there. And, you know, eNCA and ETV just ran a story early on in the morning around these taverns who simply cannot afford more taxes and higher prices for their alcohol. So, you know, it's an all-win situation. That's going to have to actually cave in. You're going to pay more for your alcohol and cigarettes, and by consequence and extension, those taverns will feel the pinch.
Yeah, Devan, it's even going to go even further, you know, even taxes now on vaping products and the like. But are these sin taxes, as we like to call them, I suppose they were wishing for a lot to think that they won't be increased. They increase between 5 and 6%. Some of the beer, for example, there are no increases. But, I mean, those go without saying every year. We expect those to happen. So maybe it was a bit of wishful thinking for tavern owners to think that it wasn't going to happen. But as you know, people and their vices, they are prepared to pay what it takes to buy those cigarettes or to buy that beer. And so maybe once the economy opens up better, they're not going to lose out too much because of these excise duties.
Interesting to see the sales. Well, thanks very much indeed, Lindsay Dentlinger, with me here at Parliament. We'll be coming back to you again, Sally and Shahan. Just talk about what really benefited the municipalities coming out of this speech. You know, we've seen unrest after unrest. We've seen poor service delivery. Did the Finance Minister, Enoch Godongwana, have an answer in that regard? In the next hour, we'll chat about that.
All right, thanks so much for that. Our business editor, Devan Murugan, and Lindsay Dentlinger.